Hey traders, this is Blake Morrow with ForexAnalytix, and you're listening to the week ahead video for November 14th, 2021. I hope you guys and gals are having a great weekend. I've got a lot to talk about. You know, the dollar broke out last week. We had been anticipating a bullish breakout. We got it. Now what? Man, we got some data that we liked, some strong inflation data. We got a Fed that's tapering. Looks good, right? Well, I exited my dollar positions on Thursday night. If you were in the ForexAnalytix community, you knew that. Now, let me teach you how to get to the ForexAnalytix community really quick. First and foremost, if you don't listen to our daily webinars, they're free. At least one of them are. And that is the free F.A.C.E webinar. You can just go to our website and go to webinars right here where it says F.A.C.E. You can register and you can join in anytime you want. You can also go on YouTube, subscribe to the YouTube channel so you can listen to it if you miss it. Okay, these are free. If you were in our community, you knew about that. But really, if you were in our chat rooms, you knew that I was exiting Thursday night. It was early morning in Asia. And how you do that is you just join our community. It's $1 for 10 days. $1 for 10 days gives you the mobile app. It gives you all the live analysis that we do, even the private webinars that we offer just our subscribers. And then also you get to join the chat room. And the chat room is where I'm most active. Now, at the end of your trial of 10 days, if you say, well, I'm just going to stick with the light version, that's $19 a month. That's less than $1 a day. If you decide to go there, well, you still get the mobile app. You still get to listen to all the private webinars. You just don't get the chat room and the advanced analysis. So try it out. $1 for 10 days. And even if you go with the light version, it's less than $1 a day. Do it. All right, try it out. And download the mobile app while you're at it. You can get it on your iOS or iPhone, Apple, iTunes, whatever they call that store now. Whatever that one is. But download the mobile app. Okay, let's get back into the market. So I want to talk about the dollar, and let me move some of this data flash over. And by the way, when you're logged into our platform on a computer, you're going to get a lot more functionality here, like, live news feeds and, news flow and calendars and, risk management calculators. All the the advanced analysis and all the analysis in the markets. Now I'm gonna get rid of this. I'm gonna actually go to live charts because I want to talk about where the dollar's at and why it's such a big breakout. Now we were anticipating the dollar to break out. Why? Well, it was a 38% retracement. The pullbacks were very shallow. We have everything supporting the dollar right now. The Fed is actually tapering bond purchases, so reducing their bond purchases, reducing liquidity in the market. That's supporting the dollar. We have very strong inflationary data, which is going to keep the Fed continuing down that path. And our jobs market continues to be strong. And, if you even look at U.S. equities, earnings continue to be good. Everybody thought that earnings were going to be really poor this last quarter. And you know what? They weren't. And the market's really, reflecting that. So the dollar's got a lot of reasons to rally. Now, the question is, have we gone too far, and where are we going to be a buyer again? And because that's the question that I ask. All right. So if you go a little bit closer into the markets, I want to take a little bit closer look of the dollar and what we've got here. So first of all, we are nearing the 161% extension of the October pullback or the October range. And that comes in right around the 95.38 level. Now, I've had a couple traders actually point this out to me. So I'm going to go ahead and draw it out for you. The dollar could very easily and very well be in an ascending channel. And now, if this is the case, let me clone this really fast. If this is the case, the dollar may have a little bit more upside, but how much more upside? I mean, we might get towards 96, which is the 50% retracement of this entire move. Now, one of the reasons why this dollar breakout is such a big deal is because so many traders really look at a 38% retracement as being, you could call it the bull bear line if you want, of a trend. So if you have a downtrend and then you rally and you stop at the 38% retracement, that usually gives you the basis of argument from a technical perspective that you're going to get a downtrend continuation. Once you break that 38% retracement, now we're in a more longer term range in the dollar. And now the risk is that we can move up towards 96, maybe up towards 97, 98 near term. Now, I think longer term, we're looking at a bigger range. The only way the dollar is going above 103 right now, in my opinion, is if there's a liquidity issue with the dollar where people are rushing to dollars. There's some sort of quote unquote black swan event that creates a rush to the dollar. If you heard the Brent Johnson from Santiago Capital interview that I did earlier this last week, we talked about the dollar milkshake theory. You can go to tradersummit.net to find that video. It's really understanding why the dollar squeezes under when the markets are under duress, and that can happen. But I'm not a person that believes, oh, the S&P is at 4,600. We're going to go back to 2,000 tomorrow. I'm not in that camp. Do I think that the U.S. equity markets are a little overbought? Sure. Do I think they'll pull back maybe to 4,200, 4,000? Sure. Will that, give the dollar a little bit of a bid? Yeah, I think it will. Is that going to take the dollar past 103? Probably not. Right. And so that's kind of where I'm at with the dollar. But the question is right now, if you're not long dollars, where do you buy dollars? Okay. And let me talk to you guys why I actually closed my dollar longs on Thursday evening of last week. The reason why is this weekend, there was a lot of risk of things happening over the weekend, possibly in the early next week. And stuff that's not on the calendar, that on your economic calendar. If you look at President Biden and President Xi Jinping, of China, you got it. They're meeting actually on Monday. And one of the things that Biden said to the American people this week is he really wants to fight inflation because he feels that inflation is a big concern for most American families, and which it is. And if that's the case, what do? Well, maybe they release some oil reserves, some of the strategic oil reserves, which they did. The White House did talk about late in the day on Friday. But also, he could try to make amends with China since they do have a meeting on Monday. I believe it's Monday night or Tuesday morning in China. They have a meeting, and how about if he talks a little bit about tariffs, trying to maybe reconcile or maybe help the Chinese-U.S. relations right now, and that in turn could be better for inflationary pressures. Maybe it brings down prices somehow. Anyway, the risk that the stock market sees that as a positive is good, and then we might see the dollar pull back as a result. So what I'm looking for early next week is I'm looking for the dollar to pull back towards the 94.50, 94.60 level before a resumption of trend. Now, what does that mean in individual currencies? Because there are certain currencies that are acting better than others. So I'm going to take you around through some of the other dollar pairs really quick because I want you to have a view of how I'm seeing the currency market right now. So you go to the euro. The euro has broken down, and we are near the 161% of the October rally. Now, I still think that the euro has a little further to go. I'm actually looking for a move towards the 113.50 level because I think the 114.50 level is, you'll see it right here, the 161% extension of this rally comes in at 113.50. I think that is where ultimately we're going. But if you've been around ForexAnalytix long enough and you've been listening to my analysis long enough, you know that I am looking to actually buy the euro on a pullback, pretty deep pullback too. I'm looking for a move down towards the 111, 112 level. That would be a retest of this multi-year broken trend line. We make our way back down there, 111, 112, and ultimately that's where I want to be long. Now, if you think about what that means with the dollar index, that means the dollar index is probably going to be somewhere around, well, I don't know, maybe 96, 97 in the event that happens. So I do think that the euro's got further to fall. Now, the way I want to view the euro near term, when I say near term, let's talk about like going into next week. I'm looking at the euro as trying to sell rallies now. If I can sell a rally up at 115.20, 115.25, that's how I really would like to trade it. Okay. Now, I'm not going to take you through every currency pair, but I am going to take you through some of the big ones. Now, if you look at the Aussie, let's go over to the Aussie dollar. The Aussie, if you've been listening here on the week ahead videos, just go listen for the last 2 or 3 weeks. Go to the previous week ahead videos if this is your first time here. By the way, if this is your first time here, make sure you do subscribe to the YouTube channel. It is free to do so. And if you like what our team does, give us a thumbs up. It's the weekend here. And if you like these videos, give us a thumbs up. I like it. Team likes it. We all appreciate it. And comment. If you have any views in the currency market, comment. Let us know. But if you were listening the last couple of weeks, I was bearish the euro, or on the Aussie too, trading the Aussie to the short side. We have a bear flag that it really completes around the 72.50 level, which is channel support. Now, there's a 78% retracement down there, and I'm wondering if this low here that we created was low enough. But I'm not too sure. As of right now, I think we're in the middle of what I would consider a range. You see this blue line right here, that previous breakdown point. I would be looking to sell the Aussie somewhere up around that 73.60, 73.70 range for a resumption back to the channel support. Now, once we get down to 72.50, I'm not going to be as comfortable shorting Aussie dollars unless the S&P is coming under pressure. If the S&P is coming under pressure, then that will open the door for the Aussie to trade down towards 70 cents. Okay, and we can talk about that here in a few minutes. Now, there's a couple other currencies that I have been playing pretty aggressively. One of them being the loonie, the dollar Canadian, which I'm not going to cover today. Well, actually, I might cover it here in a few minutes because next week we have Canadian CPI coming out. That is coming out Wednesday morning. So, yeah, you know what? Let's talk a little bit about the Canadian. Now, but first, I want to talk about the US dollar Norwegian krona. Now, the US dollar Norwegian krona, I've been playing on the long side. I got more aggressive and added to my position midweek last week as we broke above the 38% retracement that is located right here. Okay. And this is also, if you can go to the daily chart, you'll notice that is and was a breakout above the 200-day moving average. So once we broke that 200-day moving average, we broke this descending trend line that you see right here and that 38% retracement, that opened the door for a move back up towards 871. But that is previous support. It is acting as current resistance, and we've been knocking our head up against there. So now you want to find dips back down to the 200-day moving average as buying opportunities, should we see that early next week. Now let's talk about the loonie. Now, the loonie, if you've been listening into the daily webinars, we've been referencing, and even through all the analysis, let's go over to the ForexAnalytix app or the platform, if you will, and you'll see all week long, we've been referencing that rounded bottom. You see that rounded bottom? Rounded bottom. You'll see it talked about all week, rounded bottom, rounded bottom, rounded bottom, rounded bottom, rounded bottom. We talk all about the rounded bottoms, and rounded bottom continues developing, and finally we broke out. Once we broke 125, it was a clear move up to the 50% retracement. I actually thought we'd reach the underside of this trend line around 126.35. We didn't quite make it up there. We made it up to 126.05 maybe or so. Now you want to probably use this 125 level, maybe 124.50 as opportunities to buy. Now, let's talk a little bit about this because on Wednesday, we do have the inflation data coming out of Canada. If that Canadian inflation data is hot, okay, the market is expecting it to be hot. If it comes in hot, we could sell off a little further. But if it comes in a little weaker than expected, market is looking for 3.8% year over year in Canadian inflation. If that number comes in below that dollar Canadian could rally back towards the 126.60 level, which is the 618 retracement, which again, you stretch out that underside of that trend line, that could take us right up towards the underside of that trend line early into next week or midweek next week. Now, there are other dollar currency pairs we could take a look at. One of them I really want to reference is the dollar yen. The dollar yen, for people who are bearish or bullish yen, has been a really tough trade because the dollar Canadian is holding up to gains in what we call a bull flag pattern. You see this flag stick? There's the top of the flag. Here's the bottom of the flag. we're developing a nice flag pattern, which ultimately is a bullish setup for a continuation higher. So as long as we remain above, in my opinion, above 112.50, I don't think you really want to be bearish the dollar yen. It's holding up well, but the dollar is holding up well. The dollar is breaking out. But if you start to see yields, bond yields, especially in the 10-year, maybe some of the lower end of the curve, like maybe the 5 or the 2-year yields, continue to stay strong and maybe even outpace the longer end of the curve, which that means you get this flattening and possibly inverted yield curve. If you start to see those lower end yields start to really rally, that dollar yen could break out, and it could break out, and stocks may not like it, but you might even actually see the dollar yen move up as a result. So that's something that I think is really important that you're watching if you're trading currencies. All right, let's talk about really quick some of the things that are happening this next week that are of importance. Now, you can go over to your calendar on ForexAnalytix and just scroll through and follow through as I'm going through it. But let's talk about a few things. So on Monday evening, we have the, and this is Tuesday morning in Australia, we have the monetary policy meeting minutes for the RBA. We want to see how hawkish the RBA is in this environment. Are they going to continue to, to march down that path? Tuesday morning, we have retail sales out of the U.S. I do think that retail sales are going to be important because inflation is at that really, it's that point at the consumer level where it might start to influence consumer spending. Everybody is talking about inflation. Everybody is worried about inflation. If you look at some of the surveys on what consumers are really worried about, they're not worried about COVID, they're not worried about jobs, they're worried about inflation. So if inflation is becoming such a big issue, will it impact negatively consumer spending? I think we're getting close to that point, and that's why retail sales are going to start to be really important to be watched, and we are heading into the holiday season. So, I'm not so sure that we're going to have a strong holiday season, especially when people that have tight wallets and spending power, when that's a little constrained, they might not spend so much on Christmas or holiday gifts this season as they have to spend more on energy and food and housing and everything else. Like I mentioned on Wednesday, we have Canadian CPI data. We also have, moving into the rest of the week, we have a bunch of Fed governors are speaking, which is going to be really important. On Wednesday, we have FOMC member Waller. We have Evans. On Thursday, we have Williams. We have Evans again. We have Philly Fed on Thursday. And then on Friday, we have the ECB President Lagarde. She's speaking. And then we have Canadian retail sales. Then to wrap up the week, as far as Fed governors go, we have Waller and Clarida. So are these Fed governors, and this is where you probably need to take a checklist and start saying, okay, who's hawkish, who's dovish? If inflationary pressures stay strong and economic data continues to stay strong, you're probably going to get more hawkish FOMC members wanting to taper bond purchases and reduce and get to a point where they can start reducing the Fed's balance sheet sooner rather than later. And that's important because that's going to matter for the dollar. So guys and gals, if you like these videos, make sure you give us a thumbs up, subscribe to the channel down below. It's free to do so. I hope you have a great remainder of your weekend. I want to thank you for joining me. My name is Blake. Have a great one. Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.